Hello and welcome to Cash Chats, the podcast from BeCleverWithYourCash.com that helps you make the most of your money. I'm Andy Webb.
And I'm Amelia Murray. Some of the stories we're looking at in Your Money this week are the latest base rate announcement and what it means for your money, how people take longer to choose an air fryer than their mortgage, and Revolut's new air miles scheme.
We'll also go take you through some of the hits and misses from our community. That's all in episode 394 of Cash Chats. So Amelia, how are you this week? What's been going on with your money? Bad news, I hear.
It wasn't great, and I'm actually ashamed to admit it. But I lost £80 cash out of my bum bag the other morning. Yeah, so I withdrew it from the cash machine. It was really early, and I got it out because my driving instructor still takes cash. So I was like, okay, fine. Got it out. And I don't know what happened. I think I was doing a calculation on my phone calculator and I must have taken it out and it must have fallen out. But I didn't notice until it was too late. And then I retraced my steps and then never found it. And I felt really sore all day. And I think, yeah. And it kind of got me thinking about how I use cash very little. And I think that is one of the reasons I do. I think the risk of losing cash, and once you lose it, it's gone, rather than, I don't make a habit of losing my debit card, but if I did, I can cancel it. I can get a new one like fairly simply. And with this, I was like, oh my God, I'm a firm believer that, cash should be protected. I know people who love cash, who use it. It's really useful in lots of ways. But I'm like, oh my God, I never use it. One, because I'm worried I'm going to lose it. And I think the second thing I had, which was interesting, is like, I feel when I have cash, I have this urge to spend it. You've got it and you're like, well, I've got it, so I may as well just, and I feel like I'm much more careful with a debit card than I am with cash. So love cash, love it for the community, but it's not for me.
Yeah, I think the 80 quid is what makes it even more painful, isn't it? Because we probably all lost like a £5 or a £10 or something like that on a drunken night out. And I found £5s and £10s on the street as well at times, but 80 quid, yeah, that really hurts, doesn't it? Really bad.
Thanks, I make me feel better.
Do you know what? I'll make you feel even better now, because I will take your 80 quid and I will raise it, and I will raise it to 350 quid. That's what I've potentially lost this week, not in cash. So I shared this on the podcast a while ago, a very good special offer on some American Express cards, and it was spend £700 with United Airlines to get £350 back. So that's potentially a half price flight. Flights have gone up a lot more than they were, but still a decent saving. And you can have this not just on your main card. If you could do this, you could do it on your supplementary card. So we did this. We made 2 separate bookings for flights, one on my card, one on my wife's card, over 700 quid, got that £350 credit back. So we're great. This is some nice cheap flights we've got to the States. Then we had to change our dates, and I could go in, I could change it for no charge. That was all fine, move them all across. But when I changed one flight, so the UK to America flight, it was actually cheaper. So we had a little bit of credit on our account. And then when I changed, we had an internal flight as well. When I changed that, it wouldn't let me use the credit. So I'm like, well, this is stupid. And I went on the phone to him, like, I just want to use this credit for changing, because the new flight, was more expensive. So I thought, rather than pay, and this is where it's really awful, rather than paying the extra £1.60 each on each ticket, I thought, right, no, can't you just apply this credit so I don't have to pay anything extra? And there was whatever reason they couldn't do it. So they said, do what, we're going to go away and we're going to fix it all for you. Don't worry. And then you'll be able to use your credit for these new flights. Okay, brilliant. What they did with one of those credits was refund it. So they refunded £100 back to the American Express card, which took us below the £700 threshold, which meant they took back that £350 credit on one of those cards. So for the sake, literally, of £1.60 or whatever it was, I could have avoided all of this. Yes, I would have had some credit that wouldn't be used and was wasted, but none of this would have happened. Now, I'm hopeful, I've been speaking to American Express, that this can be reversed, because I've bought another flight, which I need to do anyway. So I'm going to hopefully find out this week. But my lesson here is just don't quibble over a couple of quid. I mean, the same thing would have happened if it had been 20 or 30 or 40 quid. And I still would have gone down this, because I would have wanted to use this credit, because I wouldn't have wanted to lose money. But what really irks me, what really hurts me on this one, is literally that £1.60 could have cost me 350 quid.
Well, good lessons for both of us.
Yes. Yeah. And the big thing, though, I would say, I know we've both beating ourselves up about this, but for people, you're listening to this at home or you're watching this on the YouTube channel, it's easy when you make these tiny little mistakes or these things happen to you, whether it is losing £5 or £500 or anywhere in between, obviously you get worked up and get upset about it. Do what you can to try and solve it. But if you can't solve it, I know this is kind of easier said than done in a lot of cases, but it is what it is, right? So you've just got to move on from it. Try not to dwell too much on it. So I know we're being kind of like, we've lost all this money and it's going to hurt. But, you're not going to kind of, it's not a good sort of route to go down to get too worked up if you do make any sort of money mistakes. Just learn from those experiences and try not to do them again if you can. Right, let's get into the big headlines from this week. And I'm going to kick things off because we have had a couple of big money things happen this week. First of all, on Wednesday, we had the latest inflation rate update. And then on Thursday, we've had the new Bank of England Monetary Policy Committee meeting about the base rate, what's going on there. Now, normally, I would do a separate standalone video and podcast on the base rate. But as you'll see, when we get to it in a minute, there wasn't a huge amount to share. So it's better to sort of fold it into this. So let's talk with inflation first of all. This was on Wednesday. And we have finally hit that 2% target. This is what everyone's been aiming for, which inflation should be at 2% from those double-digit highs that we had not too long ago, really, gradually coming down, coming down, 2%. That's what we wanted. That's where we're at, right? So a big part of this is that food inflation has slowed down a lot compared to previous months over the last sort of few years. Still increasing, but it's increasing at a much, much, much slower rate than we're used to, a much, much slower rate than many other kind of eye products out there. One thing which has gone up faster, more than expected, is fuel prices. But overall, all the different things have brought that price increase year on year to 2%. So if we're at this target, that would suggest that mission has been accomplished, right? Good to go. Base rate cut? Sounds makes sense, doesn't it? Sadly not. So the Bank of England Monetary Policy Committee meeting, which took place on Thursday. So if you're watching this on YouTube, that's today. If you're listening on the podcast, it was yesterday. Then they have kept it at 5.25%. This has been stuck at this rate since August last year. So that's pretty much almost a full year of no change at all to the base rate. Hence why I've been doing these updates every 6 weeks, telling you all about it. There wasn't too much more to add, but I'll give you a few things that are worth sharing right now. They've said the reason for keeping it at 5.25% is nothing to do with the general election taking place on the 4th of July. Whether we believe that or not is up to you, but that's what they're saying. They would make this decision regardless of what's going on with the election. In fact, they can't really talk about much stuff anyway because they're kind of caught in this sort of pre-election purdah thing. But if it's nothing to do with the election and inflation's at 2% already, which is the target, why haven't we seen a cut this month? Well, they still want to see if all those increases to the base rate, which we saw up from 0.1% to 5.25%, are doing enough. Because just because we've hit 2% right now doesn't mean that it's going to stay there. In fact, they expect it to go up a bit more as the year goes on, simply because of all sorts of things like energy prices and stuff we know are going to happen, already sort of baked in sort of increases over and cuts over the last sort of 12 months. We know there's going to be increases. I think it could go up to 2.5% by the end of this year before it starts coming back down again. And in fact, getting to this 2% point took a little bit sort of longer, wasn't quite as smooth as they originally anticipated. So broadly speaking, and it's about a majority vote out of the 9 people on this Monetary Policy Committee at the Bank of England, broadly speaking, the majority of them want to see if we still need to do more, wait that a little bit longer. And the vote actually this time was split 7-2. So 7 people said, let's keep it where it is. 2 people said, let's cut it down. Where it is interesting this time is that there were about 3 members who wanted to keep it at the same. And this is in the minutes. I've read it so you guys don't have to. In the minutes it says that 3 people were finally balanced in their decision, which means that they are very, very, very close. You only need 2 in next 6 weeks' time in August, 2 of those 3 people to say, we think there should be a cut for the rate to come down. So on the basis of this language that's in the minutes, it does look now more likely that the first base rate cut will be in August, in 6 weeks' time. Whenever we talk about this, we always say, you never know. And there's always, we have to say, yeah, it's definitely going to happen or definitely not going to happen. And the opposite happens. So we don't know for certain, but it's certainly looking more likely that that is going to be the case.
And I'm one of those people who's literally on the sidelines being like, come on. And I'm not talking about football. I'm talking about the base rate coming down, because I took a punt on a tracker mortgage a year ago, just over a year ago, when things were really uncertain, rates were higher than I had ever seen in like my adult life in terms of getting a mortgage. And I was like, I can't bring myself to fix at this kind of weird high inflation, high rate kind of time. And so yeah, I made the decision to take a risk on the tracker in the hope that it will be short-term pain, long-term gain. And I'm still like sitting on the edge of my seat. So we have kind of seen the conversation, like, you know, the expected rate cut has been pushed further and further back. So, you know, there's talk of it being in August, but potentially like, you know, maybe not until September, or, you know, another couple by the end of the year. But yeah, I remain hopeful. But speaking of mortgages, our next story is looking at mortgages again. So we've had some data done from our sister site, Smart Money People, and they have found that home buyers and homeowners remortgaging spend more time choosing home appliances than mortgage deals. Which is kind of an interesting trend there. So people are apparently spending less than half a day looking at mortgage options before agreeing to the deal, which is less time than considering like a coffee machine or an air fryer. And if we look into the data, I mean, it's kind of no wonder. We've got mortgage deals typically staying on the market for 15 days before they're pulled. And I've never seen that happen with an air fryer unless there's something wrong with it. So yeah, that it's people are having to act fast. People are under a lot of pressure. You know, it's a massive deal if like you've committed to this deal and then it's pulled before, you know, it's actually kind of signed off. It can affect your budget. It can affect, you know, the sale like completely. And, you know, and people are saying that they're feeling under pressure to make a quick decision because of the chaos in the mortgage market. People are feeling stressed, and 25% of brokers are saying their clients have missed out on the mortgage deals as a result of kind of all the chaos. So yeah, there's a lot of drama kind of still happening, you know, even though we're kind of hoping things are kind of calming down.
Yeah, you can understand why with so much confusion that has been going on well since the kind of mini budget of nearly 2 years ago now, but obviously everything also around it as well, where rates have just been absolutely crazy, and then you say the rates disappearing so fast in some cases, going up or going down, that you don't want to miss out. You want to kind of get on with it. So you can understand why that happens, and why people are rushing around. I also found this interesting from the other point of view, though, because in the past I've been someone who has spent too much time looking at the different deals and different like products to be buying, from like toasters to fridges and all those kind of things. So I think maybe we need to sort of find a middle ground there. You know, people I think maybe spending too much time on the stuff that really doesn't matter so much. And I can certainly speak from experience there, and maybe not enough time on some of the things that really can make such a significant difference to your finances as years go on. It's not just mortgages, insurance as well. Insurance is one of the most boring things. I hate it. I love talking about all things money related, all things personal finance, apart from insurance. It's the one thing that I hate looking at as well. But you got to do it, because at least get a sense of what's there, because you think, oh, right, brilliant, whatever it is, covered. Then the thing that happens, and you can't account for every eventuality because you never know what's going to happen, but the thing that comes along, the thing that happens, could end up not being covered and costing you a huge amount of money. So yeah, I think it's about, isn't it, trying to find the right resources to help you make that decision if it's a little bit too complicated for you, but also not avoiding things, which I guess is the flip side of it, and not doing anything at all and having that analysis paralysis. So trying to find a good medium ground. Season tickets. I want to quickly talk about these next. The report this week showing there's been a record low use of rail season tickets. Just before the pandemic, a third of train journeys were via season tickets, which you can obviously understand, because so many people, when they're on the train, they're traveling every day, they're doing it for work purposes. But then along came the pandemic, and that obviously changed things massively. So many of us working from home part of the time, or like you and I are, we're fully remote now, so we aren't, getting on a train commuting every day to an office. And that has brought down the number of journeys. Just 13% of all train journeys now are people using a season ticket. So you might think, well, okay, that's just how it is, right? I mean, there are some knock-ons from this. It obviously means if less people have season tickets, it probably means less people on the trains overall, and that means prices might be going up. So it's bad for all of us in that way. But it's worth just sort of talking about season tickets for those people who are eligible for them, who are kind of still commuting all the time, because they still have a benefit. And I think a lot of people get put off by the cost, because you are, broadly speaking, yes, you can get weekly and monthly seasons. a lot of the time people get put off buying the annual ones where there are much, much bigger savings to be had. And if you're in the Southeast, you also get a little perk. You get a little gold rail card, which is quite nice and saves you more money on other trips as well. But don't let the cost necessarily put you off on those annual ones. Things you can do, you can look at getting a loan from work. I used to do this when I lived in London. It was an interest-free loan, and it would come out of your salary every single month, but it would split the cost of that season ticket off over the year. So talk to your HR department if you are traveling every day, whether it's the tube or the train, potentially even coaches and things like that. There might be similar things going on. It's quite a common thing with lots of places. That is a great way to save yourself some cash. And just think about that money that you'll be saving every month compared to just the normal tickets, whether it's paying every day or a weekly or monthly season ticket. You can put that money to use elsewhere. If that doesn't exist, you could look at a 0% purchase credit card. Just remember with those, it's really, really important that you do pay at least the minimum every single month, because otherwise you'll lose that 0% bonus. But overall, ideally you want to pay as much as you can. You can use it to split that cost over that 12-month period, so it's all cleared by the end of the year. And just checking into this, sadly, just checking this before we spoke about it, and sadly there was another service called Commuter Club, but they went bust a couple of years ago in 2022. They offered a low-cost loan for people doing this, but the demand isn't there as much, so people haven't been signed up to them, so they had to go under. But still some options for you to consider if you are traveling at least 4 or 5 days, 4 out of the 5 days a week by a season ticket, an annual one, monthly one. They can still work out much better value for money.
And if you're tempted by the flexible season tickets, so these kind of, on the surface sound like a great idea if you are, going in a couple of days a week and you don't have to commit to the, the full annual season ticket. These offer day returns on any 8 days within a 28-day period, but they're not always the cheapest option. In fact, they're not at all. So they tend to be cheapest. So this isn't even in every case. It would depend on your route, but they tend to be cheapest if you travel, say, 2 days a week, possibly 3 days a week, again, depending on your route. But if you're doing 4 days a week or more, a standard season ticket would be cheapest. And for 1 day a week, it's cheaper to buy a day ticket, ideally in advance.
I looked at these when these were launched. I remember looking into them, and that's exactly kind of what they seem to be. But it really is worth having a look. There are calculators available online where you can look and see for your particular route what works out best for you. It might be okay. So don't just discount it out of hand. But yeah, it's sadly not as amazing as we kind of hoped they would be when they were launched a few years ago.
And from trying to save money on travel to trying to save money on childcare. The next story is looking at the link between the dependence or the rising dependence on people have on their parents or their grandparents of their children for childcare. Sorry, it's a bit confusing with all the parents. But essentially, there's some new data from Zoopla that has revealed the trend between the reliance on the grandparents to help with childcare and how we feel about where we live. So lots of families are saying that they feel stuck in like a parent trap when it comes to where they live because of rising nursery costs. So do you know how much childcare costs?
It's a lot of money.
It is. So a full-time place in nursery can cost as much as £140 a day. Yeah, which is loads. And the typical family gets 468 hours of free childcare a year from grandparents. So you can see why there is this dependency on the grandparents. And 36% of parents who say they rely on the grandparents, they're the ones who can't actually afford childcare. And so when it comes to where you're living, half of parents with children under the age of 13 live less than 5 miles from their nearest grandparent, and 7 in 10 are 30 minutes away. But lots of parents are saying that they feel trapped. So there's all these statistics about people being stuck because they are so dependent. So 2 in 5 would like to move to a larger home, but the prices are not affordable where the grandparents live. And then a quarter want to move somewhere else, but they can't because they have to remain close to the grandparents. And some can't even buy a house. So they're stuck renting because they have to stay nearby because they rely so much on it. Then you also have it on the other hand, people are actually choosing to move closer to the grandparents. So nearly 2 in 5 parents that said since having children they've moved closer, and another 11% are deciding that they want to. And in this story I read, there was this amazing case study which kind of isn't really representing the data, but there's a woman who's got a young child and she gets her mum over from Poland and the partner's parents over from France to help with childcare. And what I really wanted from it was to be like, well, are you actually saving money? Like, even if you were paying like their Eurostar or their flights, would that be saving money? And I think The reason that I'm interested in this story is because it's so reflective of how things have changed. So if you look back, decades ago, it was probably typical for people to remain quite close to their parents anyway. They'd probably have their aunt down the road, they'd have their mum next door, or, all within kind of like streets apart. And I know that still exists across the country. But if you look at the rise in people, leaving home to pursue education or to work away as opportunities, that grow and take us further away from where we were brought up, and then you might meet your partner at university who is from Scotland and you're from the South. So there's all of this real separation. And then when it comes to the rising price of childcare, we're all a bit stuck because, you don't want to sacrifice, well, you've got to work to kind of support your child. And yeah, the whole thing really needs to be looked at. And I've read through the manifestos and I'm really hoping that actually something that has been promised in the kind of manifestos really does come to light, because it's got out of control.
Yeah, and obviously, I mean, there's so many other kind of knock-ons that having children has on earnings as well. Often, not always, but most of the case, we know it is the mother who takes the time off from work or more time off from work, and that then hints at their career. They progress at a slower rate. That means they earn less. That means they've got less money going into their pensions. So all these things. It's not just about the childcare, is it? It's all those other things that combine together that really can sort of put so much pressure on people. I did actually see another story this week, and I think it was from research from Legal in General. I'm not 100% on that. I know you looked at the headlines, but broadly it was saying about that difference in cost between people who choose not to have children or unable to have children and the people who do have children, and just how much difference that actually is over a lifetime, and the difference that actually makes to, effectively your retirement, how much money you've got left at the end and how much longer you might need to keep working. So yeah, this is one of those things, isn't it, which is, it's a real kind of, everyone knows kids aren't cheap, but all these extra things, these extra bits and pieces aren't necessarily things you think about when you're planning a family. You might be thinking about how much it costs for, the day-to-day stuff, but the longer implications about what home you can buy, when you can retire, all that kind of stuff. It's certainly something that you need to be thinking about. And that's even before you get onto things like education and stuff like that. There's obviously a policy that we're going to do a special election edition of the podcast, hopefully next week, taking you through all the policies. Obviously, there is also one there about private school fees as well. Now, obviously, not everyone can afford that, but again, all these extra costs, it is absolutely massive. I want to quickly talk about a couple of things briefly here, because I am going to cover these in detail in separate articles on the website and separate videos on the YouTube channel. I'm probably covering the podcast as well. The first of these is actually already an article taking you through the changes on BeCleverYourCash.com, and I'll try and get a video live on Sunday night. But this is from Barclays. Just worth sharing it with you, give me a quick heads up. This is around big changes to their Blue Rewards scheme. Used to be pretty good. Years ago, you'd get some money back if you had some direct debits coming out, but you paid a fee, but you still made yourself, maybe 36 quid a year. Last couple of years, it's been pretty much, you pay a £5 fee, you get a £5 reward, so it cancels itself out. But you can get access to a 5.12% paying savings account, which for a long time was one of the best ones out there. This is now changing. It's not changing until September, but certainly if you have this, been aware of it and checking out the other content we've got for more detail. But basically, from September, you're no longer going to get that £5 reward every single month. And in fact, if you have other Barclays products like mortgages, and loans, you might get even more money back every single month. That is all going to go. So this add-on to your current account is going to cost you £5 every single month. But they have added in something you can get right now, which is free Apple TV Plus and the MLS Season Pass, which is a Major League Soccer pass, also on Apple TV for free. So it isn't free because you're paying £5 a month on it. I will do full analysis, as you say, to work out whether you should cancel it and how to cancel it if you want to. But just giving you that heads up now that you can activate that Apple TV Plus now already. So in June, July and August, you will get it for free. So definitely worth having a look at that. The other one I want to give you a heads up on is something from Revolut. And this is the launch of Revpoints. These are essentially, effectively every time you spend money, you'll get a Revpoint. And they launched this in Europe late in 2023, just launched this week in the UK. How many points you earn will vary depending on which type of Revolut account you have. If you have the free account, which I think for most people is probably the one you would have. The other ones, I'm not the biggest fan of paying more for those, but some people like them. But if you have the basic one, the free one, you get 1 point for every £10 that you spend. If you convert that into cash, works out 0.1%, so not very good. You can easily beat that elsewhere, but you can also swap it into Avios points and potentially other airline flights as well. And that is obviously where I think they're trying to attract people. But my quick kind of first take on this is it's still not worth using Revolut for these points. You're going to be much better off using an alternative card if you want to, if your purpose here is to get cash back or to get Avios points. But again, we'll do a proper breakdown of this on the website and all the other channels, so you can get a full analysis there. But I wanted to give you the heads up now in case you're seeing any content and you're saying, great, I'm going to start spending with my Revolut card to earn these points. This isn't a game changer, right? It's just something to consider. If you're spending with it anyway for some reason, then you'll get some points. But otherwise, don't change your habits.
Yeah, it's an interesting move, isn't it? I'm just like, who is it for? If there's like much better deals out there, and it's like, is it for people who don't want a credit card? They'd rather the kind of a reward debit card, but if so, there's better deals out there. And then it's like, because they're kind of specific with, the travel discounts and the Avios, it's like, okay, I'm confused by it, but we will see when we have a deeper dive into it. And also it's worth noting with the debit card, you don't get the same protection as the credit card under Section 75. And Revolut is not technically a bank. So in terms of the protection of your money, you won't get the FSCS compensation up to £85,000. It has its own kind of safeguarding scheme. So yeah, it's worth remembering that.
Yeah, a lot of people, there are some super Revolut fans out there, and they're going to be very excited about this. And you know what? If you like Revolut for other reasons, I personally, doesn't work for me compared to other alternatives. But great, But for everyone else, again, I wouldn't get excited about it. Okay, just stick with where you are, and we'll give you the best sort of the proper lowdown on this and all your alternatives as well very, very soon. Now, before we do end the show, as ever, we'd like to give you a shout out for those of you in our Facebook group, the Be Clever with Your Cash community. If you're not already a member, please do come and join us. I think we're at what are we on, about 13,000 people now, something like that. Join us. That's the best place to ask questions. And often we're trying to answer them on the podcast. But what we always like to do every week is share the good and the bad that you have experienced over the last 7 days. And first of all, some bad news. Sadly, this is from Shanthi. Shanthi says she missed out on the fairer share payment from Nationwide as she didn't meet the spending payment criteria. Had 1 month paying in over £500, but then not in the second month. This is a frustration which I think so many people had last year, and they're having it again this year. But again, if the criteria has been the same for the last 2 years, so if you really want to make sure, if it's the same next year, there's no guarantee there is, but if you want to get to a position to get that money, we kind of know what they're looking at. So at least we can do that at the minimum. And as I shared in my, when did I share this? I shared it just very recently. Credit card update last week. No, banking update. Oh God, I'm so confused. We make so much content. In the banking update, monthly banking update I did on YouTube last Sunday and on the website on the same day, I shared a little hack there where potentially you can be qualifying for this if it comes back next year, but also get some travel insurance as well. So if you're interested in that, do check out that content.
And one more from George, which is a real success, huge success. So George said he got his Stoozing card balance increased to 14,500 a few days ago and still got 12 months interest free remaining. Then from Stoozing, reward account hacks, bank switches, credit card offers, cashback apps, and drip feeding regular savers, him and his partner have made £10,000 in the last 18 months. And that's not all, because they're using the money to overpay their mortgage, saving even more on interest. And yeah, he wants to give a shout out because everything he's learned has been from the YouTube channel and the website. So he says a genuine huge thank you from him, which is amazing. I mean, yeah, all of the information is on the website or YouTube and podcasts, however you consume the content. George is kind of really on it. And I think some of these tricks are kind of trickier than others. For example, like the Stoozing requires a lot of discipline because you're effectively using a 0% credit card while saving the money that you would be kind of spending and putting that in a high interest account. And because of that, you really need to be disciplined that you don't go kind of mad, and you make sure that you pay it all off when the 0% interest period comes to an end. But, you know, some are, more straightforward, but it's amazing to see how they do all add up. And if you do trust yourself to kind of keep on top of things, it's definitely worth it.
Yeah, I'm so pleased. I always love to hear the successes that people have had on the back of content we've produced, and that's amazing. And that's probably one of the records we've seen. I mean, if you've managed to sort of save or make more money off the back of the things that we've produced, please do let us know. And I say the best place to do that is over at becleverwithyourcash.com/community. That's the Facebook group URL. So join us there. And every Friday we post this kind of this thing saying, look, let us know what you've been good and bad for the week, and we'll give a shout out on the pod. So if you want to hear, have a shout out on the podcast, that is a place to let us know what's been going on. That is it for this week. Thank you so much for joining myself and Amelia. If you do want to read the articles that we've covered in this episode, we will include them in the show notes over at becleverwithyourcash.com.
And we'll be back with another show on Tuesday. So see you all then.
Cheers, everyone.